Hey guys, what's up, what's going on? Welcome to week number 26 of the Dividend Investing Case Study. This Dividend Investing Case Study is a case study where every single week I come onto this channel and I show you guys what dividend stocks I'm going to be buying for this week. And inside this case study, I actually have two portfolios that I keep track of. First, I have a portfolio that is all dividend stocks, and then I have a portfolio that is all REIT or real estate stocks. So every single week, I basically go in and I buy one dividend stock, and then I buy one REIT stock. So if you guys enjoy this series, be sure to subscribe to the channel and give the video a big thumbs up. Alright, let's jump into the portfolio and let's see how things are doing for this week. Alright guys, what's up, what's going? This is inside my dividend investing portfolio here with Wealthsimple Trade. This is our tax-free savings account. We have $2,613 in this portfolio. And once again guys, if you guys missed the previous videos that I've done in this case study series, check out the description of this video. There will be a link to a playlist. You guys can watch them all from when we first started this portfolio. Completely from scratch. So here's how our portfolio has been doing over the past little while. The past month or so, we've been down about negative 1.73%, which is $42. So that basically means that in the past month, our stocks have dipped down a little bit. Over the past 3 months, we are actually up a little bit of money by 4%, and overall, we are down still 6%. So basically, the past couple months, things have kind of gone up a little bit, but then we're kind of going back down. And that's kind of what's happened. And a lot of people are talking right now is if that second wave is going to happen and if the markets are going to go crashing down in July. In fact, I did a video about that if you guys want to check that out. But in all honesty, I don't really know what's going to happen. Nobody really knows what's going to happen. I think things are going to dip a little bit. We'll have to wait and see how things go. So here's my portfolio. I'm going to go over these stocks really quickly here for you guys so you guys can see them, and then I'll tell you guys what stock I'm buying for this week for the dividend portfolio. So the first stock we have here is Bank of Nova Scotia. This is a Canadian bank. I bought this a while ago, and once again, the banks have gone down quite a bit. So we can see our total return here is negative 2%, which is $3. So this one, once again, is kind of going down too. This is CIBC. We actually bought CIBC, I believe it was last week. We bought it because I wanted to get more Canadian banks inside this portfolio. Fortunately, we can only buy one share because the shares are so expensive. But once again, we're down 3%. So you can see that over the course of like a week or two, we've lost 3% in CIBC. So any of these Canadian banks right now, I still think are a pretty good buy because of that. In fact, anything right now that's actually has gone down, that's still a solid company, is always going to be a good buy. Here's Enbridge, once again, another really good Canadian company. Enbridge is a little bit like people aren't too sure about Enbridge because they have a lot of cost, they have a high dividend yield, and not a lot of income right now. So there's some people are not too sure about their sustainability over the long term. But we have Enbridge in our portfolio. We have 2 shares, and once again we are down 1%, negative 1% here. Next up we have is PIF. PIF is Polaris Infrastructure. I bought a couple of these shares way back in the day. I can't even remember how long ago it was. It was a long time ago. We're down negative 2% for that stock. I might sell this one at some date in the future once we're going to wait and see if it goes up. I might sell that one. Next up we have R&W, which is TransAlta Renewables. This is a gold company. Once again, bought this one way back in the day. Might sell this one out of the portfolio once things kind of go up, if it ever does. We'll wait and see. And then we have SIS. This is one we bought a couple weeks ago, and this is Severia Corp. This is actually one of the few companies that actually did well since the pandemic, but you can see they actually, over the past, I'm going to say month or so, they've actually kind of dipped down quite a bit. They did well initially, but then they kind of went back down to, they actually went down quite a bit at 8%. So that might be a good buy if you think that they're going to do good going into the future. Next up we have is, I think, Shaw. And I've been buying Shaw for a while now here. I got 8 shares in total. Once again, down quite a bit since we've owned this before the pandemic. And most of these stocks are going to be down because that's just how it is. See if we can click all 13 here and get them on the page. There we go. And next up we have is TD. I don't know if I went over TD yet. I can't remember. Once again, just another Canadian bank. This is one of the few banks that's actually in the positive, and this is because we bought this one way back in the day. I think we bought this when the market really went down quite a bit, so we're still up a little bit even though banks have went down a little bit. And next up we have is just our ETFs kind of towards the bottom here. We have VDY, VYMI. I'll go through these really quickly just so you guys can see. For the most part, we're down quite a bit because we bought these like when we first started our portfolio. And this is pre-market crash, so they went down quite a bit. See, negative 8%. XHD is down quite a bit, I believe. Yep, negative 5%. XRE is this is the REIT I bought like at the start, and I've been wanting to sell to get it into the REIT portfolio, but I just I never did it because it's been down so much. There's no point in selling, right? So I just kind of kept it in the portfolio. We're down 14%. That's quite a bit. And then ZWC, I think we might be up a little bit. No, we're 0%. So as you guys can see, most of these stocks are down quite a bit, but that's kind of just expected to happen because a lot of these were invested before the crash, and then we kind of just slowly been putting money into them as you know, as stocks have kind of recovered for now, at least. But we'll have to wait and see if things go down quite again, kind of going into the future. But the one stock I want to buy for this week is one I've mentioned a few times in my previous videos, and it is a Canadian company, and it is Manulife. So Manulife is a financial company that's done pretty good. They also have a pretty nice, solid dividend. We're going to look for them here. If I can remember what the ticker is, I'm going to see if we can just, I think it's MF, Manulife Financial. So is it MLF? Might be something else. I'll have to look it up to see. I might be able to also type in Manulife. See if something pops up here. If not, I'll have to look up the ticker. Oh, geez, there's lots of them here. MFC, that's the one. Manulife Financial Corp, I believe, is the one I want. I'm just going to double check it really quick, guys, just to make sure. And yeah, apparently it is MFC. MFC is the actual ticker we want for Manulife Financial. So I just want to double check that just to be sure. But this is one that's been doing... I mean, they've been hit pretty hard since the stock market crash, but let's go over the past year or so and see. And you guys can see like they got hit pretty hard, but they went up a little bit, and they're having a nice little recovery. And the company's doing really well. They have nice, good earnings. Like a lot of their stats are just really good for a dividend investing company, and they have a good yield and stuff like that. And they are posed to do pretty well going into the future. And I think, like, they did raise their dividend at the start of the year, and I think they will probably keep it because they have good cash flow and stuff like that. So I think they're going to be a solid company to invest into, and a lot of people are saying the same. So I think they're pretty cool. And you can see here their yield currently is 6%. So they should sustain that dividend, but we'll have to wait and see going into the future if they actually will or not. Regardless of that, I think it's a pretty good buy because once again, it's trading, even though it has gone up a little bit, it's still trading at like 50% of its original value. So if you buy now, 25% we can see right here. So it's still a pretty good buy. If this stock would go up to, a year or two from now, you could get like a 20% gain or something like that, plus the dividends and whatnot, and nice dividends. So I'm gonna buy, I think, a couple shares of this. I might buy like let's see, we got $17 per share. I might buy like 2 or 3 shares, and then whatever we have left over at the end of the week, I'm gonna stick into maybe some ETFs or something that we have. I might even buy some more banks. I might maybe stick in some like maybe my TD stock or something like that, just to buy some more shares of the Canadian bank. So Manulife is my pick for this week for the dividend investing case study. And before we go into the REIT investing case study, let's just take a quick little peek at the dividends. I don't think we got any dividends once again, but we should be getting them sometime soon. Yes, doesn't look like we had any dividends other than the ones we got earlier in June, but they should start really rolling in over the next couple days or so. So keep an eye open for that. And I will check the earnings spreadsheet really quick here, guys, just so you guys can see how this portfolio has done since we first started it. Alright, so hope you guys can see this pretty clearly here, but this is like a little spreadsheet just like to keep where we track our dividends and how much we're making on a monthly basis. Of course, I haven't updated anything for the past 2 or 3 weeks, I think, as no dividends have come through, but over the next couple days, we should see those dividends kind of come in towards the end of June and the beginning of July. So here it is here, our first month of the case study, we made 44 cents, second month we made $1.61 in dividends, third month we made $4.35, fourth month we made $5.22, fifth month we made $7.79, so we're starting to kind of creep up there. And then in June, we made $4.85 so far. And in total, that's $24. So I just want to show you guys, I like to show this to like new investors, just to show you guys that over time, like your portfolios that you invest into, and keep in mind, we're investing about $100 a week or so. So it's about $400 to $500 a month. So not a lot of money, but we're being consistent, and we keep putting money back in, kind of thing. And that's the whole basic plan here. So if you keep doing that, you be consistent, you keep putting money in, these are the type of gains that you can expect to see. Once again, like just it's slowly kind of getting up there, right? Like couple bucks a month, but these gains are going to probably for the most part stay, and you'll be earning that income for the rest of your life as long as you don't sell. And that's the basic strategy with this dividend investing portfolio. So that's the dividend investing portfolio, guys. Let me know what you guys think of Manulife in the comment section. Let's jump over the REIT portfolio and let's see how our REIT stocks are doing. Alright, so here's our REIT investing portfolio, guys. You guys can see here that we have $1,675 in this portfolio. It's a little bit smaller than the dividend investing case study portfolio because I built it a little bit later on. But the whole idea is to basically track me investing into real estate and real estate based stocks, because I've always wanted to invest in real estate, but I never had the money to like put a down payment on a house. So I basically went with REITs instead, which I think is a nice way to invest in real estate if you don't have a lot of money. So here's our portfolio. Over the past day, we are up at $97, which is 6%. Over the past week, we are down 3%, which is about $50. Over the past month, we are up $1. So basically, the thing with REITs is they kind of tend to follow the stock market, but they're following the same way. If they went down with the crash, then they kind of went up a little bit, and now they're going a little bit back down. But REITs are kind of nobody's really sure what's going to happen with REITs over the next little while. For some reason, the Wealthsimple trade graph isn't working here for the last 3 months, so we'll just skip to a year. And we are down $54 and negative 3% for the year, and that should be all time as well. So once again, we're down just a little bit, not as much as our dividend investing portfolio, but we also started this portfolio a little bit later on, so we didn't have as much invested before the market crash. So it didn't get hit as bad, if you will, kind of thing, because we just had less money in it. So here's our REITs that we have here. Once again, we don't have a ton in this portfolio. It's pretty small. But the first one we have is H&R REIT. This is a REIT I bought way back in the day when it was, I think, about $10 or so a share. And we had lots of gains off that, but now it's kind of like evened out. It's about 0.04%, 11 cents, so it's almost evened out. So if this one goes up a little bit, because we have I think we have 29 shares, we get nice. So basically every dollar it raises, we get 29 bucks. So we have a lot in that one. Next up we have is RioCan. RioCan is the one I bought last week, and I still think RioCan is a pretty solid solid company, especially REIT in Canada. You bought this one last week, and you can see over the course of the week, once again, negative 3%. So over the course of 1 week, RioCan went down negative 3%. So they might even be a better buy than they were last week. If you want to invest into a REIT, invest into RioCan, because they went down even more. Next up we have here is CI First Asset Canadian REIT ETF, and we are up 3% with that one, which is really nice. And then VRE, which is a Vanguard-based real estate fund, we are down 7%, which is $18. And these REITs at the bottom here were all invested before the market crash, so they've all gone down quite a bit. And I've slowly been buying into them as time goes on. XRE, you can see, is negative 8% overall. And then ZRE is about negative 6%. So once again, I'm going to be buying into them as time goes on slowly to help build them up and get them going. But for this week, the REIT that I'm going to be buying into is going to be Brookfield Property. This is a REIT I've been looking at for a little while. In fact, over the next couple of days, I have a special video about this REIT, Brookfield Property Partners, or whatever it's called. I'm going to be doing a video of that in the next couple of days. So keep an eye out open for that if you guys want to learn more about this REIT, because that video is going to go into further details. So I believe the ticker for Brookfield is BPY, if I remember correctly. So I'm just going to type in BPY here, and it should pop up. Once again, yeah, BPY, Brookfield Property Partners, LP. This is a Canadian REIT. Brookfield has basically a lot of properties in a lot of different cases. I mean, a lot of different places in the world. They're a solid company. They've done well at running themselves, and even though they've kind of had a bit of a dip, you can see the stock has went down quite a bit. Even though the price has gone down quite a bit, they're still a solid REIT company, and they're still doing really, really well. And they raised their dividend at the start of the year, and it looks like they're going to keep kind of raising them as time goes on. And look at this, guys. Look at their yield. It's at 16%, but this is because the stock has crashed. In fact, when I did my video earlier today about Brookfield, I think it was sitting at about a 10% yield. So when that video comes out in the future, information might be a little bit wrong, but that's just because it's gone down so much over the past little while. But I'm definitely going to be buying this stock. I think it's one of the really undervalued REITs. In fact, a lot of the REITs right now are undervalued. In fact, I mean, like, any stock realistically could be said to be undervalued, if you will. But this is one I'm going to be buying for this week, and it's really, really cheap right now, and I think it's really, really worth it. So I'm going to be buying a couple shares of Brookfield for this week. I don't know, I might buy like couple, like maybe 4 or 5 shares, and then I'm going to take the rest of the money and kind of spread it amongst these REITs here once that transfer actually goes through. Unfortunately, it's Saturday right now as I record this video, so I have to wait till Monday for my transfers to go through, and then I have to wait for to be able to actually buy stuff on Monday anyways, so it's kind of like whatever, I'll just wait till Monday. So we're going to be buying Brookfield, a couple shares into that, and then I'll be spreading out into these other REITs as time goes on, kind of thing. Whatever I have left over, kind of thing, I should have like maybe $50. Maybe I'll look at the lowest ones here, or whatever ones I don't have as much shares, and I'll kind of like just kind of spread it out, kind of thing. That's all. That's kind of what I like to do. I like to buy like a new stock or pick one main stock to invest into every single week, and then I kind of spread the rest over into everything I already have, kind of deal. So let's go into here, and once again, I don't think any dividends. I'll just double check. I think when I did it earlier in the video, I didn't filter it, but I'll just do it again just in case here. And yeah, we can see no dividends have come in for the REIT portfolio as of yet. But let's jump over to the spreadsheet and let's see how the REIT portfolio has done in dividends. So here's the spreadsheet here, guys, and at some point in time I'm going to take the two spreadsheets and combine them together, since I'm now reporting the individual portfolios together. So it makes sense to basically add the weekly and monthly totals together, because they're both the dividend-based stocks, or dividend-based portfolios, I should say, just in different sectors. Like one's real estate, one's traditional dividend stocks. But I just basically wanted to create the experiment just to kind of test and see the differences, right? So our first month here we made $1.29. Our second month we made $2.28. Our third month we made $4.36, and in our fourth month we made $3.76. So once again, slowly kind of getting up there. We should see some earnings coming towards June and July for the REITs, and this should be a little bit higher actually. And then we can see the dividends in total, it's $1.69. So that's the REIT portfolio. I hope you guys enjoyed this video. Let me guys know what you guys think of my stock picks for this video in the comment section. And yeah, if you guys are new to the channel, be sure to subscribe. If you guys enjoyed the video, be sure to give it a big thumbs up, and let me know what you guys think. So thanks for joining me today, guys. I hope you guys enjoyed the video. Take care, and I'll see you guys later.